Hello, everyone, and welcome. We have a jam-packed agenda today, so I don't want to take up too much of our time. I just want to quickly introduce some housekeeping and welcome our keynote speaker. For housekeeping, please do remain on mute unless you're called on to speak. We do invite our audience to participate, though, so please do post questions you might have in the chat box or by email to enquiries@omfif.org. This meeting is going to be recorded and it will be made available on our website at the end of the day. With no further delay, I'd like to introduce Chuchi Financia, Deputy Governor of the Financial Supervision Sector at the Bank of the Philippines. Chuchi oversees the 5 subsectors which handle the integrated supervision of financial services in their institutions. This spans a broad range of matters, including oversight of payment systems, policy, supervisory data management. Under her leadership, initiatives have been implemented to leverage on technology in finance and the use of artificial intelligence. With her deep and hands-on experience of technology adoption, Chuchi is the perfect candidate to kick off this afternoon's consideration of enabling financial inclusion in APAC through the cloud. Chuchi, over to you.
Thank you. Good afternoon, ladies and gentlemen. The Bangko Sentral ng Pilipinas, or the BSP, is pleased to join the official Monetary and Financial Institutions Forum, or the OMFIF, and Amazon Web Services, or the AWS, for the launch of your inaugural report, which highlights the role of cloud technology in financial inclusion. Indeed, cloud technology and related fintech innovations are transforming the design, delivery, and even consumption of financial services. Fintechs are making financial services more convenient and affordable for existing clients. They are also paving the way for more democratized access for those who have long been financially excluded. E-money is an early example of inclusive fintech. It provides a safe, convenient, and affordable payment solution for small value transactors. Our financial inclusion survey in the Philippines revealed that the growth in account ownership from 23% in 2017 to 29% in 2019 is driven by e-money accounts, which rose from 1% to 8% in the same period. During this pandemic, e-money has also played a key role in the digital distribution of the government's social amelioration program, or the welfare benefits. In fact, according to our Department of Social Welfare and Development, that's the Ministry of Social Welfare, more than 3/4, or 78% of the 7.3 million transaction accounts opened for the SAP beneficiaries are e-money wallets. In the Philippines, 7 out of 10 unbanked Filipino adults have a mobile phone. And this presents a huge opportunity for fintechs to reach the unbanked. Their mobile phones can be their means to access digital finance services. Indeed, the pandemic highlighted the impact of fintech in moving money from one account to another and in supporting an increasingly digital economy. We have seen a quantum surge in digital payments during the lockdown, compared to ATM withdrawals and check transactions, which declined by 24% and 67% respectively. The volume of electronic fund transfers through PesoNet and InstaPay climbed by 87%. Social distancing and online transactions will likely be part of the new economy, even if lockdowns are further relaxed. And this will support sustained growth in digital payments. For instance, real-time payment transactions using InstaPay totaled to 29.8 million in October 2020, up by almost 600% from 4.3 million transactions in the same period a year ago. The BSP recognizes that technological innovation can accelerate financial inclusion. For over a decade, the BSP has been setting up the regulatory environment for an inclusive digital finance ecosystem. Broadly speaking, the BSP's framework for digital financial inclusion has three main pillars. Namely, first is democratized access to a transaction account. Second, the expansive network of low-cost touch points. And third, efficient retail payment system. We have put in place enabling regulations to promote basic deposit account, cash agents, electronic know your customer or the eKYC processes, and interoperability in digital payments. Our information technology and operational risk management frameworks contemplate digital financial inclusion. The BSP follows a test and learn approach, wherein new solutions such as cloud computing are allowed to operate in a live but contained environment. This regulatory sandbox enables the BSP to gain a better appreciation and understanding of the risks and craft proportionate regulatory response. This approach also gives financial institutions the opportunity to test the business case of proposed innovations prior to actual launching. In the Philippines, we have seen how cloud computing has improved the agility of a rural bank to manage its operations and serve clients more effectively. This rural bank is the first local bank that explored the migration of its core banking system to the cloud. It used to spend nearly $500,000 pesos, that's 10,000 US dollars, monthly for connectivity of its branches, an amount that it is now able to substantially reduce by using a cloud-based core banking platform. Clearly, cloud computing holds much promise for greater financial inclusion. Cloud-based solutions can help financial institutions to reduce costs, improve services, and expand product offerings to those who are currently unbanked or underbanked. For rural financial institutions, cloud computing offers critical access to infrastructure and computational resources that would otherwise be out of their reach. Like all technologies, cloud computing also brings with it areas of concern. These include risks of potential data loss, poor management by service providers, service interruption, unauthorized access to sensitive data, and other cyber threats that could result in financial losses and damage organizational reputations. It is thus necessary for financial institutions to diligently adhere to cybersecurity protocols, always thinking and acting several steps ahead in terms of risk management. To balance the benefits and fully manage risks, the BSP has enhanced the regulations on technology risk management and cybersecurity controls, which provide clear direction and guidance on the adoption of cloud computing. Financial institutions are expected to have an effective risk management framework covering areas such as governance, vendor management, data privacy, and business continuity planning, among others. Flexibility is given to financial institutions to choose from a wide variety of cloud architectures and deployment models. It is important, however, to conduct proper due diligence of cloud service provider and establish appropriate measures to manage and control risks. Ultimately, financial institutions are accountable to comply with relevant regulations and ensure that consumer services are uninterrupted. Guided by the enhanced frameworks and learning from the sandbox, there are now 20 banks already using cloud-based technology for core banking, with 11 additional ongoing applications. Majority of them are rural banks, which now only need to incur operating expenses commensurate to their operations rather than allot huge capital for IT investments. Just last month, the BSP released its digital payments transformation roadmap for the years 2020 up to 2023. The roadmap is a package of interrelated initiatives that harness the mutually reinforcing relationship between digital payments and financial inclusion. As such, the main goals are to convert 50% of the total volume of retail payments into digital form and to onboard 70% of Filipino adults to the formal financial system. The roadmap calls for responsive and enabling regulations to promote digitalization. Allow me to cite two forthcoming policies that will foster greater innovation, competition, and dynamism in the financial sector, benefiting both consumers and small businesses. First is the framework on the establishment of digital banks, which is currently in the finalization stage. The digital banking license aims to give digital banks a distinct classification from existing banking licenses. Digital banks will offer end-to-end digital experience to financial consumers through a digital platform and other electronic channels. They do not have physical branches, but they meet up third-party entities as agents. Second is the adoption of open banking that will encourage sharing of information among banks and non-bank financial institutions. The draft policy document expands open banking to open finance and adopts the principles of consent-driven data portability, interoperability, and collaborative partnerships among incumbent financial institutions and new third-party players. The roadmap also recognizes the critical enablers to boost digital payments and financial inclusion. These include digital connectivity, digital ID, and digital skills. Making fast internet connection affordable and widely available is crucial for digital financial services to flourish. Under the National Strategy for Financial Inclusion, the BSP is leading the push for inclusive access to satellite technology. Satellite broadband is seen as the fastest and most cost-efficient means to provide internet connection to unserved and underserved areas. We are also implementing a digital connectivity assessment survey among financial service providers. The survey aims to assess specific internet connectivity challenges and their impact on strategies and service delivery of financial service providers. Financial inclusion is also a priority use case of the Philippine ID system, or the PhilSys. The BSP is directing efforts to operationalize the PhilSys eKYC and authentication facility, which will enable financial service providers to onboard clients digitally. Last but not least, the BSP is implementing a digital literacy program to build trust in and promote usage of digital financial services, and protect consumers from usage errors and cyber vulnerabilities. In case there are consumer complaints, we have a chatbot called Bob, and that's BSP Online Buddy, which is now fully deployed to give the public a more accessible platform to reach out to the BSP. Ladies and gentlemen, much still needs to be done to reap the full potential of cloud computing and other digital technologies for financial inclusion. As we prepare for the post-COVID-19 era, we need to future-proof financial services by prudent use of technology, at the same time, ensure that every financial consumer also benefits. Let us work together to build a new digital economy that leaves no one behind. Thank you and good afternoon.
Thank you very much, Deputy Governor. And I especially appreciate how the BSP has thought about taking your citizens on the journey with you, thinking about the human in the loop and considering the points around cyber vulnerability. It's very nice and rounded. We are about to transition into a summary findings of our report that was by Brandon Chai, economist of OMFIF, and Bhavin Patel, senior economist and head of fintech research at OMFIF. This is a video presentation, and I hope everyone enjoys it.
Hello, everyone. Thank you for joining us today. Over the past 3 months, OMFIF and AWS have been working on a report assessing financial inclusion in the Asia Pacific. More specifically, the report highlights the main areas in which digital financial services can improve financial inclusion policy goals in the region. We also look at the role of cloud in enabling this. So financial inclusion remains a major challenge for policymakers and financial institutions. Approximately 1.7 billion people still remain unbanked globally, and technological solutions realized through fintech and the cloud could play a pivotal role in expanding appropriate financial services to this demographic. In this project, OMFIF and AWS Institute consulted with 18 different central banks, regulators, or policy organizations to understand their views on the state of financial inclusion in the Asia Pacific and how fintech and cloud could help expand its scope in their respective economies. The report distills the views from multiple regulatory bodies charged with pushing responsible financial innovation and ensuring the integrity of financial infrastructures. Contributors' insights are reflected throughout this paper and summarized to give an overview of the work needed to further the use of cloud as a catalyst for financial inclusion. So I do recommend you all download the report for more information. I will now pass over to my colleague Brandon Chai, who will run through the financial inclusion trends observed and challenges faced by policymakers.
Thank you, Bhavin. So without further ado, I'd like to start off by outlining some of the main trends we are seeing in Asia in terms of financial inclusion and digital financial services. So overall, financial inclusion has been on an upward trend globally. According to the World Bank Global Findex, bank account ownership has risen from 51% in 2011 to about 69% in 2017. So this progress is quite noteworthy, and it's been largely attributed to national policies that really emphasize financial inclusion, as well as the much wider use of mobile phones today and deeper internet penetration. Despite this, there's still uneven progress in the Asia Pacific on several metrics. So as you can see in the chart in your screens, the number of adults holding formal bank accounts, their substantive use digitally to transact, as well as physical ease of access to bank-based financial services. So as you can see, advanced economies such as Korea, Singapore, Japan, and Australia, these are all characterized by having high levels of account ownership, digital payments activity, as well as robust physical access to brick and mortar financial services. In contrast, however, in other countries, we can see that there are much wider gulfs between account ownership, poor physical bank branch presence, relatively lower levels of digital payments activity in many of the developing economies. So what this gap does suggest is that innovation and technology could really play a key role in leapfrogging traditional physical infrastructure and the constraints of brick and mortar based financial services. So if we were to go a bit deeper into the Asia Pacific economies, we can see that in Thailand, Malaysia, and Singapore, these are really the only countries in Southeast Asia where both the level of access to bank accounts and the frequency of digital payment transactions are above the regional average. If we look to other jurisdictions, we can see, as I mentioned previously, considerable gulfs between account ownership and payments activity. And this is especially prominent in economies such as India, Indonesia, Laos, and Myanmar. It's a consistent trend that digital payment activities actually trail behind formal account access, which suggests that digital financial services, they actually do have a considerable runway for growth amongst the unbanked or underbanked communities. And the real question is really how to promote greater interoperability, user confidence that bridges between traditional financial products and services and newer digital solutions. So, on the topic of digital financial services, many of the central banks and government agencies that we've engaged for our research, they do note explicitly that the COVID-19 pandemic is radically altering a lot of the long-term consumer preferences in how people pay, how they save, and how they transfer value. So, according to a MasterCard survey conducted this April, cash payments actually fell by about 67% in Singapore, 64% in Malaysia and the Philippines, and by about 59% in Thailand. Correspondingly, this is also paralleled by a vast increase in the use of contactless payment methods across the board. So, in terms of card, mobile, and digital wallet transactions. And you can see that in this context, pandemic driven digitalization, it's really accelerating that pre existing demand for digital services and prompting a lot of renewed interest in technologies that could streamline data management and processing. So, financial activities such as account openings, credit assessments, and payment transactions, all of these, they generate a huge volume of data and they implicitly require a reliable IT infrastructure to support these essential services. And although the expansion of digital finance and mobile banking, it's helped to reduce a lot of the constraints of physical infrastructure, and it's a boon for public health, there are also corresponding new concerns that are emerging. So data management costs, processing and storage issues, these are all concerns that are attached to the growth of digital financial services and indeed in expanding financial inclusion a bit more broadly in the region. So now we've outlined how advancing digital financial services is becoming a lot more crucial to the topic of financial inclusion. So actually, 73% of the central banks, regulators, and the other government bodies that we've engaged, they've actually noted that financial inclusion is an explicit policy priority for their institution. So financial inclusion, it's not just about having basic access to bank accounts or e-wallets. It's also about how these products and services could be appropriate and have meaningful impact for both individuals as well as small businesses to help spur higher economic growth. Now, from an individual standpoint, financial inclusion can greatly lower transaction costs and the time taken to process cross-border payments, and in particular the field of remittances. So in the Asia Pacific, migrant labor and remittances, these are typically very significant components of GDP to many developing Asian economies. In fact, the ADB reports that remittance flows to Asia in 2018 were approximately 302 billion, which is about 44% of the global total. And although remittance costs are slowly averaging down, as you can see in the East Asia and the Pacific, these are still quite significantly above the global average. And that really indicates that remittances and payments can still be made a lot more cheaper, a lot more faster, and a lot more efficient. And similarly, if you look at South Asia, although it's below the global average, there's also room for improvement as the average cost in this region has remained fairly stable. So we can see that innovations to payment processes from areas such as fintech and cloud computing, these could really address a significant gap in improving opaque remittance business models and reducing a lot of the costs attached to these services. So for instance, in India, the National Payments Corporation of India, they've actually launched a remittance service that is tied to their Aadhaar national ID system. So apart from the individual, when it comes to small businesses and SMEs, financial inclusion is also about not just transactions, but the capacity for underbanked SMEs to really access working capital, invest, and to grow their businesses. Across the Asia Pacific, even in the more wealthier, more advanced economies, such as Singapore, Japan, or Malaysia, we can see that credit, access to credit, this is often a big gap for the SME demographic. So We can see here that new technologies, for instance, AI, machine learning, and all these advanced data analytics, these are often being integrated into fintech products that could access the credit profiles of this invisible prime of SMEs that are unable to access conventional credit and insurance services. So typically, financial inclusion, this is seen also as a policy matter for developing countries. However, as advanced economies undergo demographic shifts to an older population, they also face their own distinct financial inclusion challenges. And this was something that many of our respondents from the advanced Asia Pacific economies also highlighted. So, for instance, if you look in Asia, Japan and South Korea, they do stand out as countries where rapidly aging populations, they could be disproportionately vulnerable to being left behind amidst the advances in fintech innovation. And we are seeing these challenges being explicitly recognized on international platforms. So, for instance, the G20 Fukuoka policy priorities for aging and financial inclusion. So, while the financial services industry, this has broadly adapted to the digital age by changing the way it delivers products and services, and this is more oriented towards younger tech-savvy customers. So, what is needed right now is really the same agility in order to ensure that innovation is inclusive and that can connect with the needs of older consumers. So policymakers, financial institutions, and fintechs, they all need to anticipate and plan for the future of technological change that intersects with these demographic transitions, and it's really affecting the way in which consumers access and use financial products. So in the fintech space, we can see innovations such as robo-advisories, wealth management, and fraud detection. These are all examples of data-driven innovations that can provide customer services a bit more of a targeted basis to the diverse needs of elderly people, and really creating protection for the older adults from financial abuse and fraud. So this potential to expand upon the economic empowerment of individuals, the elderly, and businesses, they must, however, be built on a foundation of core fintech activities. So at this point, I'd like to take the opportunity to pass back the baton to my colleague Bhavin to explain a bit more about the specific fintech applications and the technologies that a lot of our respondents have highlighted as particularly important areas to address, as well as how cloud can really be an important enabling catalyst in this context.
Thank you, Brandon. There is extensive consensus on the importance of digital payments for basic financial inclusion. So 92% of respondents to our survey agreed that innovation within digital payment processes were amongst the most significant areas in where fintech was improving financial inclusion objectives within their own jurisdiction. So the function of digital payments as an entry point for digital financial services is clear. Payments and transaction activities are typically ubiquitous across most daily economic and social functions. So a well-functioning and inclusive digital payment system would serve as the foundation to provide further access and gradually build consumer confidence and acceptance in more sophisticated products and services in the region. So cloud technology, while acknowledged as an important enabler, must be deployed alongside complementary areas to be fully effective in supporting data-driven digital financial inclusion services. So it is important to further acknowledge other prerequisites that may be needed to achieve digital financial inclusion. So the chart here shows the results from the survey where 75% of our respondents identified mobile network infrastructure as an important foundation for financial inclusion. So apart from the fundamental infrastructures to exchange and store data, other technological prerequisites need to be in place to establish a conducive and stable environment for increased adoption of fintech and digital services. So for instance, following mobile infrastructure, many central banks in developing Asia emphasize the cardinal role of digital identity and KYC mechanisms in scaling up a secure digital financial system. So easily accessible and trusted digital ID can be a key enabler, bringing unbanked into the formal financial system, especially due to the current lack of official ID documents among the rural community. So this would also enhance the ability of payment providers to meet AML or CFD compliance requirements while catering to a wider customer base. So on the next slide, you can see this tree diagram. So while cloud, along with other data management and analysis technologies like AI and ML, are seen as important bridges that translate policy initiatives such as digital ID, infrastructure, and open API regimes into tangible, inclusive financial services and products. To continue with this tree analogy, payment, clearing, and settlement services are likely to be the lowest hanging fruit in order to further promote basic financial inclusion among the unbanked communities. So what benefits do we see from cloud adoption? Firstly, the most frequently identified benefit of cloud on financial inclusion among our respondents centered on the cost savings potential derived from cloud and its potential to allow more fintech actors to service end users more cheaply. So according to 80% of survey respondents, the cost savings of IT investments and the resultant increase in market competition were the primary benefits of cloud services to financial inclusion. Additionally, driving competition through access has been another well-identified benefit. Several respondents felt that while cloud permitted a greater variety of financial actors, products, and services, further policies or incentives were also needed to ensure that end user benefits and competition innovation were byproducts from the cost savings of cloud and lower market barriers for providing digital financial services. So to have the most impact on financial inclusion, cloud adoption must translate to greater access to and affordability of financial services. A crucial ability is also to give smaller companies and fintechs from developing countries the means to overcome limitations in infrastructure to support wider digital financial services. So smaller companies and fintechs may struggle to meet prohibitive costs and labor for maintaining very high and expensive IT services, for instance, ensuring redundant servers, networking gear, internet connections, uninterruptible power supplies, server cooling, as well as the need to maintain backup locations are all resource-intensive IT obligations. So utilizing cloud services, the functions can be instead outsourced to a specialized cloud service provider with dedicated infrastructures. So the offsite distributed nature of cloud computing can resolve several of these local limitations as it facilitates greater versatility for financial institutions and fintechs business models. On the next slide, I want to add some context and give some examples around some of the enabled services we've come across during our study. So one important aspect many central banks in developing Asia emphasize is the cardinal role of digital ID and KYC mechanisms, which we already mentioned. So this was selected by 69% of respondents as an essential feature to increase financial inclusion and migrate customers to digital financial inclusion. One example is Naira, a consumer finance startup in India that provides small loans to lower income groups. So to overcome the barriers of identification, Naira uses a cloud-based computer vision platform for the necessary image verification and validation services for customers' Aadhaar card. The company was also able to scale up the services very quickly from a few thousand to 2,000 monthly active customers through the cloud infrastructure. So cloud fintechs could even complement and build upon ongoing central bank efforts to upgrade and expand the inclusiveness of payment infrastructures. So Click, another example, a Cambodian payments aggregator operating on the cloud, will integrate with the National Bank of Cambodia's blockchain-powered digital currency system, Bakong, which went live in October 2020. So Cambodia's payments infrastructure is fragmented and made up of numerous licensed payment service providers and banks. So Click here aims to harmonize the payments landscape, provide convenient, interoperable ways for users to interact and transact. So Click was able to collaborate with both commercial banks and the National Bank of Cambodia to develop interoperability, and it uses KYC capabilities to help underbanked Cambodians open bank accounts. Other examples we can mention here are TrueMoney and EasyPay, which are both cloud-based payment solutions. And there are plenty of more examples and use cases I'm sure we will discuss on the panel. On the next slide, I want to end on a final point about the preparedness for cloud adoption. So from the chart, we can see that Asia-Pacific economies that are most prepared for widespread cloud adoption are also those that are ahead in financial inclusion, at least measured by account ownership. So the Asia Cloud Computing Association scores countries on cloud readiness based on a number of quantitative and qualitative indicators that measures connectivity, infrastructure quality, regulatory environment, and business sector sophistication, which you can see on the y-axis here. So high marks here go to Singapore, Japan, Korea, and Australia, which implies that countries with more robust inclusive financial sectors are better prepared for widespread cloud migration. Meanwhile, other countries still have ample room to make infrastructure and regulation more conducive for both cloud adoption and financial inclusion. This is especially true in fast-growing and rapidly digitalizing countries in Southeast Asia. So if policymakers in these countries can develop cloud-ready regulatory environments alongside reliable, high-quality digital financial infrastructure, significant numbers of financially unserved populations could benefit from cheaper, customizable digital financial services based on the cloud. Developing economies in the Asia Pacific have a significant opportunity to leapfrog from path-dependent legacy technology infrastructures to more flexible cloud-based models, creating the appropriate regulatory framework, strengthening basic digital infrastructures, and fostering inclusive fintech solutions can pave the technological foundation for businesses and individuals in these countries to become financially resilient. So as regulatory institutions and central banks attain better understanding of cloud platforms and implement appropriate safeguards, the benefits of cloud to financial inclusion will only increase. So I want to end on that final point and then end the presentation here. So on behalf of Brandon and I would like to thank you.
I hope everyone found that interesting. We do invite you to download the full report from umfif.org, where you'll find all the details behind what was run through. We are an inclusive environment. We encourage everyone to please pose your questions via the chat function or by emailing inquiries@umfif.org. The panel have a depth of experience and would be very, very happy to take the questions that may arise. So if we were to speak then about inclusion, after all we've heard today, I think it's clear that inclusion goes beyond the concept of e-wallets and bank accounts. And it's really about the various end-to-end ecosystems that enable economic opportunities at an individual level as well as an SME level. Access to services can become more efficient and cheaper, as we heard in the remittance example earlier. And of course, there'll be access to capital more broadly, which will enable us as we look through the end, hopefully, of this pandemic and into recovery. From a policy perspective, innovation and inclusion also have a huge role to play in helping us manage demographic shifts and the long-term sustainability of our environments. I'd like to introduce our speakers today. Seri Chia, Assistant Governor at the National Bank of Cambodia. Seri has been pivotal in introducing innovative policy instruments to develop interbank markets and also to promote the use of local currency. As the chair of NBC's Clearinghouse Operations Committee, she leads the Bakong project, which we just heard about. That's dedicated to the creation of a blockchain-based payment system, which is going to play a huge and very significant role in driving inclusion. Thank you, Seri, for speaking to us today. We also have Nandini Hariswara, Senior Advisor of the Inclusive Digital Economies Group at the United Nations Capital Development Fund. Nandini was previously a digital finance regional technical specialist, responsible for the creation and implementation of the UNCDF's digital economy strategy in Zambia and Malawi, and has hands-on, hands-dirty experience of implementation. Agni Bakaskaite, Head of the Public Policy for Regulated Industries Group at Asia Pacific at AWS, is also joining us today. Agni focuses on cloud computing and technology policy issues for telecommunications, financial services, healthcare and energy, all key sectors for financial and social inclusion. Lotte Skau-Zeibel, Regional Director, Pacific Liaison and Coordination Office at the Asian Development Bank, who we've heard so much about tonight. Lotte works on improving the quality, reliability, and availability of critical infrastructure in both the rural and urban areas of Asia to boost economic growth, create jobs, and provide access to services. This is a very rich and very deep panel, and I really hope that we'll pose tough questions and we'll learn a lot today. If we could open perhaps with Seri. Seri, would you be able to speak to us about how you see the potential of cloud?
Thank you, Tamara, for the introductions. I think the presentations as well as the speech by Deputy Governor from the Bank Central of the Philippines has been very clear, particularly for small financial institutions, players. So in our case, the rural credit operator, for instance. I think it makes sense from the sense that if you want these institutions to be more innovative and adopt new technology, there must be a way that is affordable for them to do so, because if it's too expensive, the cost will then pass it on to the customer, and that's been the purpose of financial inclusion itself. So I think from that perspective, clouds in a sense make a lot of sense for smaller financial institutions. But again, there's also risk that has been raised about the privacies and the service provider. How much can we trust? Also, the understanding of the institution themselves in terms of human resources. Do they have a team who understand, and so on and so forth. So there are potential to reduce costs, but there are also risks that need to bear in mind.
Thank you, Sari. And yes, I think the role of talent was something the BSP also had highlighted, and their investments in that space. So when I think about that, Agni, AWS, you have such a strong relationship with so many fintech innovators. What have you observed the role of cloud being, particularly in APAC?
Thank you, Tamara. And first of all, I would like to thank our partners, SOMFIF and AWS Institute for the report. I believe it's a great study, and I'm really happy for it to see the daylight today. So yes, I think in my brief comments, I'd like to talk a little bit about, how from our perspective, we see cloud supporting the financial inclusion, helping to facilitate financial inclusion through the fintechs. And that is looking at the financial inclusion of Asian populations, as well as financial health of the SMEs in Asia. As we have heard from the report, around 1.7 billion adults today remain unbanked or underbanked globally. And unfortunately, around 40% of that is in Asia Pacific. And when we look at the SMEs, the International Finance Corporation mentions that around 40% of SMEs in developing countries have an unmet financing need of almost $5.2 trillion a year. So digital finance, from our perspective, has a great potential to improve access to financial services for these populations and SMEs. And when we look at financial services industry, this industry is undergoing a huge digital revolution. It is triggered by the new technologies such as cloud, but also by changing consumer behaviors and competition from disruptive fintechs. We've seen this really being further advanced by COVID pandemic, which triggered unprecedented reliance on technology, and financial services, being one of the most innovative industries, has been able to remain really resilient and stable throughout the pandemic because of such migration to cloud. So we are seeing more and more trust in that technology, which is a really great trend. And cloud, because of that, has become the new normal for financial institutions around the world, including our region. In particular, digitally native fintechs. It has created these opportunities for digital financial services to accelerate financial inclusion. So when we work with fintechs, our customers, they always tell us that they can benefit from that massive scalability that cloud brings them. They can leverage cloud for various use cases, data computing, analyzing large amounts of data very easily. They can go global in minutes. They can use global infrastructure and provide services regionally or globally cross borders. And they can strengthen their security stance. So increasingly, our customers are saying that compared to the on-premises or legacy IT infrastructure, public cloud and its capabilities today give them a much bigger and better position with regards to security of their services. Just looking at ability to put the data in multiple locations eliminates that single point of failure or attack for hackers. That's just a simple angle of it. Looking at for example, the Frost & Sullivan report of this year on financial inclusion, they're saying that fintechs can promote financial inclusions due to two reasons: the convenience and lower costs. They don't have typically physical branches. They can avoid costs related to infrastructure or its maintenance, and also they provide convenience to customers of not needing to come to the branches, and that especially helps populations in rural areas. Secondly is the efficiency and customization. So by definition, fintechs rely heavily on technology. And really, that is one of the key differentiators of fintechs when compared to traditional banks. And I wanted to mention a few use cases of our customers. In fact, a few already were mentioned by our own fifth colleagues when they presented the study, like Click customer that runs on AWS Cloud, but also a few other customers, like, for example, True Money, that was mentioned as well, which is basically a payment services provider that operates in 6 Asia Pacific countries: Thailand, Myanmar, Cambodia, Vietnam, Indonesia, and the Philippines. And it provides digital payment services, basically a digital smart wallet. And really, when we look at True Money's websites, e-wallet, web application, the payment gateway functions, it all runs on AWS Cloud. Looking at SME specifically, there is another example I wanted to mention, which is the lending, and that is our customer Amarta, which provides peer-to-peer lending to small and medium businesses, entrepreneurs in rural areas in Indonesia. In fact, they are focusing on working age mothers with dependents, supporting their entrepreneurship and businesses. And actually, they use substantial data analytics and processing workloads on AWS to identify potential non-performing loans. So these are just a few examples. There are definitely more, but I'm definitely happy to see the whole trend. And yeah, thank you.
Thank you, Agni, and thank you, Sari. I think one of the things that's emerging in the conversation today is this idea that the way a policymaker might need to think about things is to really think quite carefully about the infrastructure and the pillars of strong policy when it comes to enabling inclusion. I know that the BSP's approach was run through earlier on, and of course, Bhavan touched on the network infrastructure requirements in his summation. But while we have the opportunity to hear from people who've actually worked on some of these policies and seen them play out in practice, Lotte, I'd like to call on you, if you wouldn't mind, to hear what you think the pillars of strong policy would be when it comes to enabling inclusion through the cloud.
Thank you, and thank you, Tamara. And first of all, I'll also echo my colleagues here on the webinar, and that Deputy Governor for Nasi and the UNTIF report really provided a great starting point to this discussion. And I just want to start off with an example from an incident that happened actually earlier this year in the Solomon Islands. It's the Vela La Vela Island in Solomon Islands. So this particular example is a teacher on Vela La Vela Island. When she needs to access money, now she's already teaching or remittances at a relative center, she needs to take a day off work, travel by boat to nearby Gizo Island where there is a bank account. But frequently, however, there's bad weather. There can even be cyclones that cause delays, or there's poor and unreliable internet access that also delays access to her account. So sometimes she gets stuck there for the whole day, or even she has to wait a whole day at Gizo Island to access her money. So of course, this adds both cost and time. And scenarios like this, where people travel far to access cash, or where basic infrastructure, such as internet and electricity, is either not available or not reliable, is not uncommon. And it's not just an instance that happens in the Pacific, but it happens in many other parts of the world. So this just brings me to the basic rails that need to be in place to effectively reach the underserved and unbanked. And Bhavan and Brandon, they also touched upon some of these. So in no order of priority, these basic rails, they include, of course, ID. Everyone needs an ID. Individuals who lack any formal identification, they're also typically the most vulnerable people in the poorest country. And identity verification is, of course, also crucial to comply with basic KYC requirements for account opening and financial inclusion. And there are many, many initiatives to provide ID. But globally, there's still 1 in 7 who do not have any legal form of identity. And this means that they're both financially and socially excluded. And the second, of course, is to ensure affordable and reliable access to internet and electricity. And of course, again, many are the financially and socially excluded that live in remote and rural areas. And without access to affordable and reliable internet and electricity, financial services just won't reach them. Even if they're available, they can't be reached. So as an interim, what we try to do is to develop solutions that work offline and online, and then can update once it's connected to the internet. Just for example, in Papua New Guinea, only 20% of the population has access to electricity, and network penetration is about 15%, and about 15% of the population have a bank account. Also in Papua New Guinea, only 5% have a birth certificate. The third is to promote a secure and interoperable payment system. And this includes making payment technologies more efficient. So a poor payment system should be built on the principles of interoperability, inclusivity, cooperation, and competition. And fourth is to ensure trust. And trust is a very powerful driver of consumer behavior. So new digital financial products and services, they should be designed with data protection and cybersecurity integrated at the outset. And Deputy Governor Fornacier also emphasized the importance of addressing cybersecurity. So organizations need to identify cybersecurity risks and invest in adequate and proper controls. And for there to be trust, users need to understand the financial services that are on offer. So this requires financial literacy, but also digital literacy. So lack of financial and technical literacy is a major reason for lack of access to finance in rural communities, and especially also among women. So we need to look at financial literacy through a different lens and using technologies to deliver more interactive financial literacy and education programs. But there are also cultural differences or cultural challenges. Just to give another example, in Nauru, which is a small Pacific island country of about 10,000 people, if you look on a map, it looks like a rock in the ocean. So financial inclusion measured through access to bank account is about 100%. However, the median balance on a banking account is about $18. So people don't use their bank accounts. In Bendigo Bank, they have a branch in Nauru, but they currently don't provide any lending. They're considering doing so, and there have been attempts in the past, but there's no culture to pay back, and there's also no culture to save. So to address this, we are at ADB providing financial literacy training, and this also includes integrating financial literacy education into the school curriculum. Because we think that if you need to start from the very early ages to train and educate people on the importance to save and invest. And also in Nauru, mobile penetration is very high. So we're now exploring digital financial outreach and training through, for example, SMS, financial literacy videos and applications. My sixth point is the need to be customer-centric. So financial services and products, they're really only good if they're being used. So services and products that need to be developed with a focus on meeting the real needs of individual users. So as mentioned in the report, customer centricity requires products to be tailored to the needs of the user. And again, Bhavin and Brandon, they talked about the aging society and the elderly, and they've become an increasingly important market segment to serve. In Japan, for example, Kyoto Shinkin Bank, probably pronounced that completely wrong, they run programs such as flower arranging and knitting to capture seniors' interest. And they couple these sessions with lectures about products and services that are targeted at elderly people. So this brings me back to Nauru's case, where financial inclusion is 100% but people not using the accounts. We need to go beyond credit. So the discussion often stops with access to credit. So we need to talk more about micro savings, remittances, pensions, and insurance. And my eighth and last point is the need to empower women. Globally, women use savings account twice as much as men. And given the expanding access to mobile devices, mobile banking can be a key tool to close the gender gap, and especially financial access. So I'll stop there. Thank you.
Thank you, Lotte. And I think that's very well timed, given that we're about to look at the role of women in society and later report that UNFIF is working on. I'm sorry, I couldn't resist that. And it's also interesting because you've touched on, the policy enablers to adoption, but you also made a very, very critical point, which is innovation is only ever as helpful as the adoption and use of that innovation by the end consumer. And so when we're here thinking about how to bring more people on the journey with us, what are the challenges that this group of very talented individuals has observed towards these the adoption and use of these innovations and how we reach scale, particularly in the Asia Pacific? And then Dini, I know we haven't heard from you yet. I'd love to hear your thoughts on this.
Thank you, Tamara. Yeah, I mean, I think across the world, but especially in the Asia Pacific, one of the great challenges is, and it was very interesting to see OMFIF's presentation on the data analysis around what usage looks like in Asia Pacific, and it really reflects actually what you're seeing around the world. But just because you're seeing more access to financial services, just as Lotte says, just as you're saying, you're not necessarily always seeing that bump in usage as well. Right? India has about 80 to 90% of its population with access to a bank account, according to Findex. However, when you look at usage rates, they really vary. And so depending on sort of what those use cases really look like that are actually meeting the needs and wants of customers, I think that's something that's really lacking in many regions, including APAC. And I think it's an ecosystem challenge, right? So like it's not just how our private sector stakeholders using Silicon Valley cutting edge tools of human-centered design to really address the needs of customers in a sustainable way that works for them, that also addresses their key performance indicators, which is important. But it's also how do policymakers think about it, right? Lotte talked a little bit just now about women and how important women are, right? They're 50% of the population, in some of our markets more. And most of the time have a 10% financial inclusion gender gap, have a 10% mobile access gender gap. If as owners of small to medium enterprises, there's a 62% gender gap in least developed countries. So what are we doing as financial inclusion ecosystems and digital economy ecosystems to address those gender gaps, right? And we have to do that as an ecosystem, but I think I'll talk about that a little later. Tamara, this isn't what you asked me, but it is on topic. So if you don't mind, I'll just say a couple things. I was thinking a little bit about the topic generally, this report that's just come out on the use of cloud to accelerate, hopefully, financial inclusion in the APAC region. And after being in the digital finance space for the last more than a decade now, it strikes me that the conversations around cloud are very similar to the conversations we were having around digital financial services 10 years ago. And it was really, the question was like, well, what is this? This is new. Is it safe? Is it regulated? Can we use it in our markets? Regulators have had questions like these, as did people on the ground. And eventually we were sort of able to say, listen, this is a business tool. It is regulated by the central bank. It does, sort of hold itself to, all the regular rules and regulations that a financial service would do in any country specific to its own regulatory body. And so does cloud, I think, and it's getting there, and Agnan talked about that, and I think she'll talk a little bit more about that later. But I think that's how I see this as well, cloud as a business tool. And so, earlier we were talking a little bit about banks versus fintechs. And I think that's a false dichotomy as well that we talked about 10 years ago. We always said, well, who will win out, the banks or the MNOs or the fintechs? And I think in a lot of markets, you're starting to see that all three or types of organizations recognize that they need each other. And the cloud plays a role in how they relate to each other as well, because it can often lower the costs of doing business together. So yeah, I mean, I just thought I had some of these thoughts around sort of the topic at hand, which is cloud as a tool, that I just wanted to share.
Yeah, and I do think you're right. In the end, adopting cloud is almost inevitable because it is going to be such an enabler that businesses that do not in some way adopt cloud are potentially going to be left behind. So although it can include people, ignoring it could potentially exclude people. And I guess if
you know, I do want to just say one last thing. Regulators have the responsibility, and we saw this from our colleague at BSP, and we see this with our colleague Saray, is that they have two responsibilities. One is to allow an enabling environment for innovation to improve the lives of their citizens and customers. And the second is to protect their customers. And that's like a very delicate tightrope to walk. And I think that's the case with every new innovation and business tool that comes along. It's the job of the regulator to really understand how do we allow for that experimentation to happen without really endangering its citizens. And sometimes that's a tough tightrope to walk, depending on what the infrastructure ability is of the country and sort of its citizens' ability to understand and uptake the work.
Absolutely. And I think the tightrope is something we should come back to, I think, because it is such a critical piece in this entire policy debate where you want to enable, you want to protect, but you have to make sure you get both sides right. And I have to be honest with you, this is why Sari gets the big bucks and I don't do that job, because it's such a difficult challenge. But I think before we get to the piece on the tightrope, I would like to just wrap up this conversation around the challenges we see with scale in Asia Pacific. Because Sari, I know you, when Sari and I first met years ago, we spoke about things like the very basic infrastructure to enable some of these technologies to be adopted, things like internet connectivity. Actually, our conversation was about electricity back then. And, you know, we have seen so much emerge, partially from the sustainability space where people now have access. Are there other challenges you see on this horizon, Sari, from an infrastructure perspective? And is there a role for policy to play there?
Yes, definitely. Talking about infrastructure, I've got 1/3 of the conversation gone because of the internet connection. Yeah, you mentioned rightly about the basic infrastructure first, so electricity and internet connections. And when we talk about financial inclusion, we're talking about the lowest segment of the markets. There are people in the rural area, people with low income, where this kind of basic access is really, really lacking. So even before we go about and address all the digitalizations, we first need to address that basic infrastructure. Now, supposedly this is done and addressed. The next thing is how can we bring in affordable and convenience to the people so that they can use these financial services. I mean, Lotte mentions about in the Pacific Islands, and I think somewhere here in Cambodia, when you have lack of physical infrastructure, road and bridge, etc., traveling from your house to the bank branch to do some deposit or loan disbursement, etc., it's repayment. It's really challenging. It's time consuming, and I mean, if you were to take a day off just to do a deposit, then you're taking a day off from your farmings where your livelihood lay. So how can we make this accessible and convenient for the people is the next stage. And I think in this instant, technology play an important role. What is essential for policymakers is to also promote these innovations, but also try to create interoperability. I think that the Central Bank of the Philippines mentions about their policies on trying to create interoperability. Cambodia did the same. So just now, Bakong project was mentioned, and just an example, in Cambodia, we have the banking system who serve people in the urban area, and then we've got the payment service providers. Those are providers who give e-wallet kind of services, and those people serve mostly people in the rural area. Without interoperability, you're creating sort of segmentations. We already have a lot of segmentation in the markets, but here you're creating urban and rural, and we were to talk about inclusiveness and equity, etc. This is not good at all, because then you keep the rural people within their rural sort of ecosystem, then the urban within their urban ecosystem. And so if rural people move to the urban and they want to send money back to the rural, then they have no way to do that, right? So if I'm in the urban, I have to go to a bank and I send money to somebody in the rural, which I have to send it to a bank, but then people in the rural area can't access the bank because they only have a e-wallet. That's really something that is challenging. So interoperability here is very important to connect the two together. So what we created with Bagong is to connect the bank and the payment service together, service provider together, bring the payment service together among themselves as well. That is essential. But I think also what is important in terms of infrastructure is also the enabling regulations, as I mentioned. Cloud, for instance, in Cambodia, I mean, in our prep meeting, I've mentioned about, you know, what is the role of the central bank and what are the role of other agencies in this. As far as we're concerned, and it was mentioned, is that the central bank responsibility is to maintain the privacy, integrity of the data, etc. But it's not in our job to look after national securities in a bigger picture. I'm not saying, but so that would need, you know, other authority to come into play as well. So in our case, we do allow cloud, and actually cloud usage in terms of software, cloud on software, software on cloud. A lot of these smaller microfinance institutions are using that. And it helped, obviously, like Agnes mentioned, scalability. And, you know, if they're serving 1,000 clients, there's no point investing in their own infrastructure, a data center, recovery center, etc. So that really makes sense. So enabling regulation is really essential. And beyond that, there's many other infrastructures. As I mentioned, a credit bureau is important, because what do you want out of this digitalization is the data itself, and used ethically, it can help a lot, because you bring people, actually digital payment, etc. It's not just for the sake of digital payment. When you access credit and deposit, there is precondition in order for people to access this. So deposit, you have to have spare saving. Credit, you have to have, you know, income, generate cash flow. We have to have the credit worthiness to access the credit. But payment, it's very universal. Anyone make payment, right? Even if you're poor, you have transactions. So accessing to digital payment services create a digital footprint, or at least a footprint within the formal financial sector, and that help the financial institutions to better understand you, to understand your behavior, your cash flow, etc. And that eventually will build up to access to credit and other services. So credit bureau in this instance play a very important role as well.
Yes, that's fascinating. I have to admit, I hadn't quite thought of that, and how it might eventually lead to better access to credit just by virtue of allowing very small transactions in the first instance. Agni, I think that's a really good point at which we can think about the policy itself. And one of the things I know you've spent a lot of time on is understanding the global landscape and where best practices are emerging. And so if we can see the value of cloud and inclusion from what Seri and everyone else has articulated, what do you think are the game-changing approaches that you've observed?
Thank you, Tamara. And yes, we work with various regulators and policymakers around the world. So we do see various practices on how regulators are addressing and approaching cloud in their regulatory frameworks. You know, starting with even financial inclusion before we even move to the cloud, we have seen really amazing frameworks and policies and strategies implemented by various regulators to support digital financial inclusion. Like, even if we look at the region, at our Asia region, there are some really great initiatives that the governments have taken. Like, we heard the Deputy Governor Chuchi talking about the BSP's framework for digital inclusion. This is a great example. We have such examples in other countries in our region, like India's Jam Trinity example, for example, or in Cambodia recently, and I know Seri will know more better than I, launched its own central bank issued digital currency to support financial inclusion. So there's a lot of really great initiatives that we're seeing in terms of the policy driving financial inclusion. Now that takes me to the cloud policy, cloud-related policy. Overall, we have seen a really nice trend of a lot of central banks and regulators seeing the benefits of cloud computing, understanding how important it is as a technological enabler to extend financial accessibility to underserved communities, and to support such digital finance. Quite a lot of countries, in fact, in our region and broadly globally, have adopted frameworks that have allowed those financial institutions to migrate to the cloud and for cloud service providers to provide services to financial institutions, and including the mission critical or core banking workloads, right, that we have heard from the BSP, where they were talking about how many banks are already using cloud for the core banking functions. We are still seeing some challenges in our region. However, so some countries still lack clear frameworks that support cloud expressly. So for example, they either don't have clear outsourcing guidelines or regulations and technology risk management regulations, or such regulations are just not suitable for cloud environment. That often causes a lot of uncertainty. When we work with our customers who are migrating to the cloud, we still see a lot of them raising questions and sometimes saying, oh, we're not really sure if our regulator allows us to do that. So there's still, we believe there's still some work to be done for central banks and the regulators to clarify existing policies, or perhaps issue new policies that clearly address the cloud and ability for the financial institutions to migrate to the cloud for core and non-core workloads. It is really important from the best practice perspective. Tamara asked about the best practices around the world. The best practices are the risk-based approaches to such policy, which in fact the BSP, the Deputy Governor, was talking about, and it's a great example where the regulator is saying, we will support the risk-based approach. We will not push for very prescriptive approaches, you know, how you're going to migrate, what are you going to migrate, which workloads. We will allow you to manage your risks, understand what sort of data you're moving, understand the risks associated, and then effectively choose the controls that allow to mitigate those risks in the cloud environment. In addition to that, it is really great when the regulators are playing a proactive role in promoting cloud and clarifying those misconceptions that we are still hearing in the industry, like the BSP just did, like Saray was talking. You know, really, it is a great example when the regulators are proactive, clarifying. Another challenge we are seeing with cloud adoption is residency requirements. We definitely, from our own assessment and restricting local jurisdiction only does not provide better overall data security. In fact, from the policy perspective, we always advocate for alternative ways to address such perceived risks, like clear data protection frameworks, cybersecurity strategies, and financial services specific operational resiliency frameworks, like we were just discussing, the technology risk management frameworks, business continuity guidelines, and so on. So that definitely for us is a better approach than localizing the data. Cross-border data flows are extremely important in financial services industry. So yes, we're definitely supportive of alternative approaches. And the last I wanted to mention is collaborative approach to regulation, which we have increasingly seen in our region, which is absolutely a brilliant trend where financial services regulators are no longer working with just financial institutions. There are broader stakeholders being involved in such discussions. Even the fact that we are on this panel here today is already a good example of that, where AWS is part of this conversation, where really just keeping the track of technology evolution is a challenge in itself, and working better, on creating those best practice guidelines and sort of understanding the impact of new technologies and business models and respond accordingly. That collaboration is really necessary.
Thank you, Agni. We lost, there was a little bit of interference along the way, but I think we caught most of what you had. And I have to say, this is again why we know that infrastructure matters. I think one of the things that you've spoken very clearly and very articulately about is the policy aspects and how we get to strong, robust policies. But as we spoke about earlier, policy just paves the way to adoption and use. And so if we start to think about adoption in a little bit more detail, I'd like to put it to the panel what you've seen for those of you who've worked on implementation as being the best practices and good thinking. If I perhaps start with Nandini, who I know is an ecosystem person, so I am a little bit biased, I'm a fan of the ecosystem. Perhaps you could share some of your best practices that you've observed in your career. And you're still on mute, Nandini, so if you might need to come off.
Thank you, Tamara. So I think one of the best practices that we have seen in digital finance, in financial inclusion, and in building digital economies is taking an ecosystem approach. And what that means is, for a long time, we would make investments as implementers, as donors, just basically in one part of the ecosystem, right? That would be with private sector or with public sector or with civil society, but not with sort of all of these different pieces that really play a small role. What we discovered was it doesn't work. It doesn't work when you invest in one part of the ecosystem. You have to invest in multiple parts of the ecosystem and really understand how do they all work together, right? So when we have market facilitators in 28 countries in Africa, Asia, and the Pacific, and in each of them, what that market facilitator works to do is understand the incentive structures, the natural incentive structures behind private sector, right? So private sector is interested in increasing customers, increasing profits, reducing dormancy, right? Public sector, that tightrope balance, right? Increasing innovation and enabling increased financial inclusion for their citizens while protecting their citizens, right? And civil society, which is really increasing critical life outcomes for everyone, but especially those that are underserved. How do you look at those incentive structures behind each of those market players and help use those incentives to move a market towards increased financial inclusion, increased inclusive digital economies that leave no one behind, right? And that's usually women, that's usually youth, that's usually people that live in the rural areas. So how do we bring a market forward while still helping everyone meet their key performance indicators and yet really be inclusive in the growth of the economy? And so that takes time, that takes people on the ground. That takes building deep and trusting relationships with those market actors to then first really understand what those incentives are and then build to those incentives, right? And align those incentives to move them, right? All the things Lotte talked about, require not just, technical assistance is a huge part of it, but also really understanding how public and private sector play together. How do they speak to each other? How are policies designed while listening to the private sector? And often they are talking to each other, and Sari's nodding her head. They are sort of being designed in tandem with each other. So I think when we think about how are we, how do you see these economies advancing, and how do you see them addressing the things Agne was talking about, some of the challenges around financial institutions saying, I'm not sure if my regulator is comfortable with this yet. It's really about taking an ecosystem approach and ensuring that there is public-private dialogue on, well, what are the challenges that we're seeing? How do we address those challenges in a responsible way to make sure that the regulator feels comfortable because they have that tightrope that they have to walk? And how do we move the market forward, right? How do we realize the benefits of the cloud, of digital finance, of these other things? So I think it's hard and it takes time. These are not things that, I used to be a donor, I used to work for USAID, and I used to think that we could achieve results in a year or 2 years, right? And I think in the digital space, absolutely things can move very fast. But I think if you're looking to make lasting impact within a market, it takes at least 4 or 5 years to build those relationships and align those incentives. I think those are just some of the learnings that we've had at UN Capital Development Fund and several other organizations that have been market facilitators in countries and actually tried to change markets. So in some of the markets we've worked in, digital finance usage was very low. In Zambia, it was 4%, and now, or at least a year or two ago, it was at 44% of adults using digital financial services. So, those numbers that you saw in the report are happening, but they can be accelerated as well when you have strong market facilitators helping to address those challenges in the country.
Can I switch? Yeah, sorry. Can I stretch a bit further and in the ecosystem to include, a lot of the time, the basic of economic is demand and supply, right? And a lot of the time when we talk about financial inclusions, we almost always talk about the supply side of it, which, how can we make financial service cheap? How can we make it convenient? How can we make it accessible? And we invested a lot of money, I mean, look at the fintechs, and no offense to the fintech players, look at the money invested into those startups for the sake of financial inclusion. And so we're trying to push these services to the people without trying to understand whether the people are actually needing it, right? And so very few times we talk about the demand side of it. I mean, do people actually need this? Do people know how to use it? So financial literacy is oftentimes not given enough attention. And I think this is the part of the whole ecosystem. You address the supply, but you also have to talk about the demand. And I think there was one of the questions regarding financial literacy. I think this is probably one of the most sustainable solution to financial inclusion, because you can push product to them. If they don't know how to use, you're creating risk. And it's actually very destructive for the people, but also for the whole financial stability as well. I wish that there could be, more sort of discussions about. With the help of the Asian Development Bank, Cambodia has been able to introduce financial literacy into the general education program. We're actually one of the few countries in the world to do that. I think Fiji is probably our idol, and we're trying to follow them, where students from grade 1 to grade 12 will be able to learn about financial literacy. So, simple interest calculations, what is insurance, what is deposit, how do you calculate all this? So that will be embedded into the general education program. We also launched a lot of campaign for people above grade 12, obviously, on financial management. We cooperate with the Ministry of Women Affairs to teach the women business community, but also women in the rural area about simple financial services. So we work together in terms of, making financial system more affordable, accessible, but also at the same time, we're also trying to work with the people. And, changing people mindset, it takes a very long time. In addition to that, a part of the whole ecosystem is also the how can we address the KYC part? I think that was something that was mentioned. If your country is sophisticated enough to have, this digital KYC infrastructure in place, that's terrific. But if you're not, then you have to deal with the fact that some people in certain remote areas don't have access to these formal documentations. In fact, tomorrow I'll be launching a service with the Bank of Thailand, where we're trying to encourage Cambodian migrant workers to open a bank account so that they can receive their salaries into a bank account and bring them into the formal financial services. The challenges that we foresee already is that a lot of them are illegal and won't be able to produce documentations. But how can we work around that? How can we try to understand and work with the different entities to come up with something that would allow them to still open a bank account? So I think all these need a whole holistic approach and not just a one-side approach on the supply side.
Yeah, can I just say one other thing? Sarah, you really emphasized, and Lotte mentioned this earlier as well, the critical need for digital and financial literacy. And that's like number one, especially for women, because women tend to be less literate and less digitally confident for a variety of reasons, right? But I do want to say, I think central banks have been, kind of drumming this beat of the need for financial literacy, and now digital and financial literacy, for some time, and you're not being heard. And so my question is, why aren't you being heard, right? And I think the reason that it's not being heard is because donors often think that it should be the responsibility of the financial sector in terms of their marketing to teach people how to use their products, which isn't always going to work, right? And secondly is the more traditional means of digital and financial literacy is expensive, right? Training people is expensive because often it's one-on-one stuff. And so I think that there's some really interesting conversations going on now, especially leveraging the cloud, that can hopefully lower the cost of what that looks like to sort of increase the availability and applicability of digital and financial literacy training. And so I think that's the conversation that actually is really, really important. I don't think anyone debates how important it is, but I think it's really hard to do well and effectively. And so the question is, why is that? And how do we use technology and innovation to try to improve outcomes there? And just one piece on Fiji is, thank you for quoting Fiji. It is actually a project that UNCDF helped institute many, many years ago, and we're excited that it's gone very well and is being replicated in Cambodia. So we'll want to learn from you as well, and from Lotte with ADB. Sorry, Tamara, back to you.
No, I'm relatively mind blown by pretty much everything that's been said. So, you led with the whole like 10x success rate, which is, not something we hear often anymore, where, you went from 4% to 44%. That's pretty incredible. And then, Sari, you've actually picked up the entire financial literacy question that I was saving for later, but I think now is worth dwelling on because, Lotte, I know you have views on financial literacy as well. And just to give Lotte time to gather her thoughts now that I've sprung that on her, I thought I'd also mention, with the work I do here in Singapore, I work with lots of startups, and it's been amazing for me to see how many cloud-enabled startups are coming out using gamification platforms to try and basically deliver financial literacy in a way that's very consumable. And the way those gamified concepts are being used, where they fall into apps, they can be done in Fortnite, as my 9-year-old tells me often. Children will find ways to learn. I think one of the biggest barriers right now is probably language and translation, but we're seeing some of the technologies emerge that will help with that. So the journey is definitely underway, and it's just us hoping for the future and watching the evolution grow. So Lotte, if I could stop hogging the limelight and turn to you, I know I had initially asked about the best practices around encouraging adoption and what's worked, but while we're on the topic of financial literacy, I'd love to hear your views on that initially, if that's all right.
Sure. So we've done a few different, quite interesting and innovative financial literacy programs. I mentioned one in Nauru where, of course, each country is in different stages of development as well. But we did an interesting one in Mongolia several years ago. And then we actually worked with real actors and developed a reality TV show. And this episode, if I remember correctly, was 22 episodes. And each episode would address some basic needs, and it had primetime was on primetime television as well. And so each episode would address a specific issue, very basic things about what is an interest rate and what kind of services, what kind of savings account, what kind of credit, and so very basic services. And after each episode, and we worked with a telecom provider who would then send out, I think it was about 1,000 questions to 1,000 recipients. They got a number of questions that were based on each episode. And the people could ask these questions. And about halfway through these episodes, people started getting the questions right. And then in an impact evaluation following this reality TV show, we could see that people's behavior was changing. People were going into a bank, they were asking more about, well, what kind of interest rates do you have? And they would shop around a bit more. So they were becoming much more inquisitive and active in how they approached the different financial services that were being provided. So I think that was just one interesting way of doing it. And also going back to financial literacy, we talk about financial literacy, and over the years, billions of dollars have been spent on financial literacy programs globally, and still you have so many people that are financially illiterate. So I think we have to look at financial capabilities as well. So the difference there is that the capabilities, you're actually teaching the people how to use it. So the very simple example is you show them the ATM machine, you bring them to the ATM machine, you show them how to work, and you also tell them, please don't share your password with anyone. So it's really teaching people how to use it, not just putting people in a room and lecturing or presenting to them. You have to, they have to do it as well. So I think that's an important difference to make as well. I'll stop there.
That is fantastic, and it is an aspect that's not often thought about, because it's a little bit too real in a way. It's, we all sort of going at 5,000 feet, we forget about the 5. And so when we spoke before this call, Lotte, you had touched on some really quite interesting examples, and there have been quite a few today. I have an endless appetite and hunger for examples. You told us about a cloud-based bank in the Philippines and some Samoan KYC utilities that you've been working on. Given that those touch on the examples we've heard today around identity and also just moving to a digital bank, I'd love to hear a little bit more about those, and I take it that the audience would too.
Yeah. Well, so I was really happy when Deputy Governor Fornacia, she mentioned the rural bank in the Philippines would be the first bank in the Philippines to integrate cloud-based core banking. So I'm very happy to say that I did have the opportunity to work with Cantiland Bank on this journey, which started in May 2016 on the sidelines of ADB's very first ADB FinTech Forum. So it was at this forum where Tanya Hotchkiss, who is the vice president, she met one of the a service provider called Aradian at this event, and they started chit-chatting. And then a few months later, I ran into them again. They said, "Oh, we're talking about integrating cloud-based or core banking into cloud into core banking." And I said, "Well, we have some TA funding, so we can support." So I've been part of this process the whole way, and it's been really exciting. And so this has been a partnership, has been really critical in this whole journey. So ADB provided the grant funding to support what was initially the pilot project. The central bank in the Philippines provided governance oversight by placing the pilot in its test and learn environment with a regulatory sandbox. And Aradian provided the cloud-based software as a service system as a core banking system. And then as the project has progressed, more partners have also been brought in. And the project takes advantage of the opportunity that's provided in the 2013 circular issued by the Central Bank of the Philippines, which really opens up for cloud-based technology solutions for the financial sector. So the project leverages cloud technology, and as mentioned, it was the first bank in the Philippines to leverage this technology. So I'd like to talk about some of the lessons learned as well, and some of the initial benefits that we could call out from an impact evaluation that was done. So some of the benefits include, and these are also actually highlighted in the report, so it all kind of gels quite well. So better manage IT operations risk, improved redundancy, disaster recovery, increased availability, integrated accounting, consumer relationship management, and real-time reporting. And as I mentioned, there were many lessons learned as well. And one is that we really underestimated change management. When we developed the pilot project, we factored in change management, but we underestimated the time needed and also the magnitude. Because the change management process, it needs to be integrated and implemented at all levels, from senior management to the branch officer. And it's also more about just learning the new technology. It's about behavioral change and the need for more clarity in internal management procedures and communication procedures for the whole reorganization and adjustments of business processes and continuous training. And of course, it was a shift from monitoring and maintaining servers 24/7. They had at the time 43 branches with servers, and all of a sudden they were all shut down in one time. So what do you do with all the servers, and what do you do with all the people who have been monitoring and maintaining these servers? Do you fire them or do you retrain them? So all these things that you need to take into consideration. So the change management also included business processes, mapping, re-engineering, front end, mid office, back office. And then you also had the whole third-party integration, which entailed challenges with ATM integration. So, and that took quite a bit of time and quite a few hurdles on the way as well. And of course, the sandbox approach was very beneficial, and this allowed the whole pilot to be tested in a safe and sound environment. And we also ensured that we had a team of cybersecurity experts. So ADB, we have our own cybersecurity team that could provide support, and we also had consultants to support throughout the process. And of course, it's also important to align compliance structure with the new business models, which means that audits and reporting need to be adapted to incorporate cloud solutions. And I think it was mentioned before that many institutions are not quite sure if they're actually allowed to integrate cloud or not. And this is actually what happened with County Land Bank. They were moving forward, they were talking to other banks, and the other banks were saying, well, we're not really sure that we can. So they were sitting a little bit on the sidelines waiting to see how it goes. So I think that they were really brave in County Land, but it also put a lot of pressure on us because I had to make sure that this was going to be successful. So it was a really great experience. And then of course there are other projects that we're working on, and there is this perception that cloud is risky and perhaps less secure. And I think the knowledge and understanding of what cloud is and what regulators and what regulations apply is limited among many actors, including financial institutions. So we're working on another project in Papua New Guinea, and there, just to keep everyone comfortable, we're providing cloud, but we're also going to provide servers just for comfort. So we'll do that. And the project we're working in Papua New Guinea is actually quite interesting as well, that it comes back to the initial request that we got was to provide people with an ID so they can access financial services. So as I mentioned, only 5% of the population there have a birth certificate. Now they're in the process of developing a national ID, and these things take time. So we were asked to support just to work. We're working with 2 microfinance banks and working with them to provide users with an ID that works offline and online, and that has biometric identification. So we're in the process of developing this. Of course, with COVID, things have slowed down a little bit, but we are making good progress on that. Hopefully next year it'll pick up a little bit in pace. Proof of concept has been done, and hopefully the pilot can roll out early next year. So that we're quite excited about that. And of course, there's a lot of data management. Cybersecurity is a huge issue there as well. You also mentioned, touched upon Samoa. And Samoa, we also have a project, and I think remittances was discussed before as well. And the remittance corridor in many Pacific countries is among the highest in the world. So we're working on the remittance corridor between Samoa, New Zealand, Samoa, Australia. And this solution that we're looking at has 3 components. One is a biometric ID, and then there's a KYC, and then there's actual transaction. So that's something that we're in the process of developing. And then there's also a regional KYC project that is ongoing, but it has a lot of other partners in it, and not just, we're working with several other multilateral development banks and reserve banks across the Pacific on that. That's early stages yet, but I think that's really exciting because de-risking is a real issue in the Pacific, where large commercial banks withdrawing the correspondent bank accounts because of perceived risk with the AML, CFT, and so on. So this is a really important project that we hope can have a really good impact. Thank you.
Thank you, Lotte. And I appreciate you talking about the provision of service and the very hands-on action that you've been taking. We had a question from the audience around how policymakers work with companies who are sort of in the business of providing this. And I think the role of independent organizations as a facilitator, or as Nandini called them, a market facilitator, is really quite critical there. We have touched a few times on the idea of the tightrope and the balancing act that regulators and policymakers have to do. And I think in a way that question around how policymakers deal with commercial enterprises is really going to the same point. And so if we think for a minute about the tightrope, are there any examples you would give or just recommendations you might have of things that really should be considered by both sides? So it's not often natural for a commercial enterprise to think about safeguarding the population. And it's not always natural for somebody trying to safeguard a population to think about scale, or international global hyperscale, as some people might put it. So with that in mind, is anyone willing to risk themselves and deliver some advice on empathy?
Well, I mean, I think, and Lotte mentioned this in our pre-call preparation, so she also has some expertise in this area, but I think that's the role of sandboxes, right? There are regulatory tools that allow for engagement with private sector entities, corporates, and others that allow for experimentation, right? And that's not just in the financial sector, but that's in actually every governmental sector, right? And it's saying we are willing to test this in a safe environment as long as there's very strong dialogue between the two actors. And these are the things we're concerned about. So let's monitor them for a small population in a small area that are well informed, et cetera, et cetera. So, I mean, I think there are tools to address risks and challenges. Agne mentioned taking a risk-based approach, and sandboxes are part of that, you know? And so I think regulators are empathetic, and they do want to see scale in their countries. And I think, and what's interesting is when you talk to market facilitators on the ground and you talk to them about their conversations with private sector, one of the things that private sector is most interested in is market facilitators' relationship with the public sector and their ability to have those conversations on their behalf sometimes. And so, I think there's deep empathy on both sides. And I think that there's deep understanding on both sides. And I think that there are tools for those conversations to happen. Sometimes those tools are stronger than others, and sometimes those understanding of those tools are stronger than others. But yeah, I would have to defend both sides and say, I think that there's deep empathy on both sides, and a need and a want to have those conversations. Sometimes they don't happen as frequently or as effectively as everyone wants them to happen. But there is a want and a need for those conversations.
Yeah. Would anyone else like to respond to that as well? That's fine. We have actually started.
Tamara, I couldn't quite hear your question. I'm sorry. There was a word that I didn't catch. Can you repeat the question?
Sure. We were just talking about the tightrope and the role that different people might play. And I wasn't sure, Lotte, whether you might have a view on that. So, is there, when we help people navigating the balancing act, is there anything you think would be helpful for either private or public to bear in mind as they engage with each other?
I think we've touched on it several times, and Saray made a really clear point that we need to focus on the needs, and we need to focus on the demand side. We can have all the cool solutions, but if it's not being used, we really miss the point. And I've been to, I think many of us have been to a lot of fintech forums and things, and you find all of these really cool solutions, and they are really cool. But if you don't have an ID, if you don't have electricity, if you don't have the basics in place, and if you don't have financial literacy, it's not gonna cut it. You're not gonna bridge the gap. So I think we really have to pay very close attention to the needs of the beneficiaries if we're going to be successful. And I think this is one reason why there's still so many people that are financially excluded, because we're not paying enough attention to it. And we're not paying enough attention to making sure that there is electricity and internet connectivity. There is not enough roads and all that all the basics. It's just not there.
Yeah. Yes, you're right. And we have touched on that, and I think we can only hope that things begin moving more quickly as we work hard on collaboration. And on the topic of collaboration, we did have a question come in, seeking an opinion from Agni around how cloud providers and their clients are preparing for managing data privacy risks. Agni, would you be comfortable speaking on that topic?
Yes, of course. So data privacy, data protection, cybersecurity, and security of data that's being put on the cloud is really a top priority for us. Therefore, we really work very closely with our customers to ensure it. The way we see it as a shared responsibility with our customers. So we have the concept of security off the cloud, which is the responsibility of us as a cloud service provider, which is basically ensuring the security, safety, and protection of our infrastructure, the very physical layer of that infrastructure. So the networking, the servers, the actual equipment on the ground. Then we have security and protection of the data in the cloud environment. And that really is the responsibility of our customer to ensure that the way the migration or the cloud is architected, it is secure. Very closely with our customers on that. We give them a lot of support and advice, best practices on how to architect that cloud in a secure manner. So when you look at our infrastructure specifically, we do design the actual infrastructure globally according to the best security practices. And we also comply with global compliance standards when it comes to such security. To understand what controls we have implemented on the infrastructure layer, our customers can access the third-party reports. For example, the financial institutions very often access our systems and organization, the SOC 2 report, which talks about the controls of the physical layer. On the customer side, and that goes to the security and protection, the privacy of the data in the cloud environment, the customers own that. And it is very, very clear because the customers own the data, they control the data, they control where that data is being stored, right? So they might have their own specific regulatory compliance obligations to store the data somewhere specifically or manage it in a particular manner. So it's the financial institutions themselves that manage that security in the cloud environment. And they do ensure that security. So then we provide the tools to encrypt the data, for example, to manage the access to that data so it's done in a secure manner. Also to understand, how to protect that data when it's being migrated, being either in transit or at rest. So we do have a lot of services that allow them to manage that. For example, to encrypt the data and use other different tools to protect the privacy and security of that data. And it gives them much better capabilities. For example, the monitoring of the activity in the cloud environment, the threat reporting, for example, and capabilities like that usually they do not have in legacy or on-premises systems.
Thank you, Agni. I'm very conscious now that we have a few questions left and only a few minutes left. I'm going to pick one that hasn't really been delved into in our conversation so far, which is really around the other side of the talent conversation. So we've spoken about the talent competition in the sense of creating financial literacy amongst our populations, and I would extend that a little bit into digital literacy, where we have to coach people or empower people to understand things like data analytics. So if they're going to start using some of the benefits that are offered to them, they need to be enabled to understand and interrogate and interpret that. So if we think about that, it becomes a conversation then about the future of work, to use a slightly tired term, and what jobs will look like, and whether these emerging businesses and disruptors that we see will start to create roles as they implement in their home countries. Do you have a view, or have you seen anything in your experience around the role of these fintech disruptors or cloud providers or anyone who's entering the system and beginning to create when it comes to talent extension and job creation?
There's this huge role for e-commerce, right? And I'm not saying it just because Amazon Web Services is here, but I mean, you see e-commerce popping up increasingly that are not Amazon platforms across the world, especially with the increase of COVID-19. But even before pre-COVID-19, there were, a significant increase, especially in countries that you wouldn't least expect them, least developed countries, which is what UNCDF focuses on, of e-commerce platforms, right? And so when you start thinking, Tamara, what you talk about in terms of digital skills and skills around data analytics is sort of what we talk about with SMEs, MSMEs. How do we help increase their digital skills, right? Which is kind of an advanced version of digital literacy, right? Digital literacy, you have how do you use a phone, how do you send a text? And then the sort of, you begin to get to those next levels of how do you use your technology, phone, and most likely smartphone to help advance your business. And so when you think about what that looks like for entrepreneurs writ large, but especially women entrepreneurs, which are usually sort of left behind in that sort of advancement of e-commerce as a new tool for business and a new tool to reaching more customers, and Lotte keeps bringing us back to customer centricity and making sure that we're actually addressing a problem for customers, and e-commerce can do that, right, if it's done properly, and often you are seeing the buildup of e-commerce across Asia, Africa, and the Pacific. And so what you want to think about, I think, when you're thinking about how does cloud enable that, and then how does that actually answer the problems of these two actually different people, although they're both sort of, sometimes the Venn diagram does intersect, is women as business owners and or business owners who need to be part of that advanced ecosystem, and then customers, right? And then how do you help customers link up into that e-commerce ecosystem? And then how do you help businesses link up into that e-commerce ecosystem? And people who don't necessarily have expertise, have the networks to understand how to actually do that, often suffer. And so I think it is the job of market facilitators, of public sector, private sector, and others to make it as easy as possible for those two actors to understand how to use those platforms and how to benefit from those platforms. And so I think that's at least one answer to the question that you posed.
I can jump into, actually, it's something that we're focusing quite a bit on now in ADB, and we're just in the process of rolling out a fairly large technical assistance project across the Pacific to support micro, small, medium enterprises recover from the COVID effects. And this will also include how we can help revamp these micro, small, medium enterprises using digital technologies, including supply chain. And we've also provided substantial amount of support to our countries during this COVID pandemic through different COVID pandemic response plans. And most of these also support micro, small, medium enterprises, social factors, social protection, including employment. And so I think, and many of these include digital technologies, how that can support recovery, like I said, from the COVID. And so I think that's certainly something that we're focusing quite a bit on at ADB.
Thank you, Lotte and Ndini. I know that being in Singapore, we see a great deal around job creation initiatives and the support that businesses are bringing to recovery. We're just bang on time. And so to wrap up, I thought I'd just run through some of what I heard today, and I'm hoping this will resonate with our audience. So we've heard so many very real examples around how we can overcome physical hurdles to inclusion, such as identity documentation, third-party integration. And one thing I heard quite strongly was these things are being dealt with and addressed, but they're being overcome carefully, and it's likely to not happen overnight, but to take some time. And one of the things that's going to anchor that is really this idea of trust. So right at the very beginning, we heard about the basic rails of data protection and data security. Sari spoke about data portability and interoperability. Those are things that take careful planning and, analysis and experimentation, as Nandini spoke to. We heard about how important it is for policies not to be prescriptive, which could end up potentially, as I see it, being limiting, but to actually allow for flexibility so that different types of businesses, different operating environments can be served over time. The idea that there's certainty, that's also very strongly linked to trust. We need to know what we can and cannot do. And so that's, again, taking us back to that tightrope. And where we are not certain, Nandini called it out. She said, you know, you need to have a safe space to experiment and to try, rather than to sort of wear that risk in business. Nandini also talked a lot about the holistic investment needs and the idea of thinking about the entire ecosystem. And this was touched on several times through today's conversation, and actually quite deeply. I was very taken by Seri's idea about deliberately serving even the excluded, for example, the illegal migrant population in a totally different country. You know, that's a very broad approach and a very deep, sincere, heartfelt approach to protecting your people. I think Lotte also talked about the how to do journey, you know, going up to an ATM and showing people the reality of what they're being taught. That idea of walking the path with your people, influencing their adoption by meeting this demand with where the supply exists, is absolutely key. So we had a question that we didn't address directly around how can we influence people to adopt some of these friendly platforms that we're seeing emerge. And I think that idea of showing them why they might need it and the benefits it brings to them based on what they already know they need is very important. So we spoke about the spectacular technology, but does it actually fix the problems people live and breathe every day? That's actually very key. And then finally, from my notes, Agni in the Q&A, she talked about the very important distinction between the roles and responsibilities that different participants have in the ecosystem. So the idea of the provider being the provider of the tool or tools, as the case might be, and the adopter being the owner of the data. So there are very clear and distinct divisions in terms of who owns and does what. And I think those need to be very clearly understood to help drive adoption successfully across all our economies. With that, we have 2 minutes to the hour. I can't thank the panelists enough. There's been so much content. Honestly, my wrap-up took a fair amount of time, and I felt I only skimmed the surface of all we talked about. I'd like to invite the audience to download the report from our website. Any additional information or meetings you might be interested in, our website has those listed. And please do feel free to give us your feedback and ask any further questions. We'll try our best to follow up. Thank you very much, everyone, for sitting with us for 2 hours. And thank you very much again to our panelists for the work you've done today.